We're going to talk more about the PNB numbers with Hemendra Hazari, who joins in on the phone line. As of now, Hemendra, what have you thought of the PNB numbers? And the stock seems to have factored the worst in now.
That's what it appears to be. Although the market, I believe, was expecting a net loss of around 53 crores. They have far exceeded that loss. Again, what I've been saying this for some time now, for the last 2 years, that you should expect a tsunami of bad debts to hit the banking sector. And what you're seeing in terms of increase in bad debts here and the kind of losses that banks are reporting, I think is the beginning of this tsunami. I would also like to add that this is not the end of bad asset quality in the industry, but the beginning of the end. There are going to be a lot more worse numbers to come, because a lot of these assets which are being identified are mainly pertain to the corporate sector and to large corporates. We're going to see a similar contamination happening with the SME sector, and because of the poor rainfalls, you're going to see the contamination spread to your rural and your agricultural portfolio, and soon it will also then go to the retail portfolio, which is mainly an urban phenomena, and which banks have been pushing, retail credit. But that is also going to start getting impacted, in my view.
Okay. We have Pankaj Sharma of Equities joining in, and Mayuresh Joshi of Angel Broking as well. Pankaj, coming to you first, what have you made of the PNB numbers with a gross NPA of over 55,000 crores now? How much worse do you think it could get for Punjab National Bank?
See, I think what has happened compared to third quarter, definitely this number is on the higher side. So I believe that we might see a couple of more quarters where this number could get even worse. So most of the times when you look at the third quarter comparison and the fourth quarter comparison in PNB space, when what we were looking at NPA numbers for third quarter, it was expected that maybe fourth quarter would be a bit less and probably there would be some relief there. But fourth quarter number is an absolute shocker. It's much higher than what we could have expected. So I think that maybe a couple of more quarters before we see some more clarity on this, but the numbers are really very bad, and I don't think it's going to improve very soon.
All right, let's get Mayuresh then into this conversation. Mayuresh, I've seen the numbers. I think it's a miss on all parameters, and people are expecting a tsunami, etc. But it's worse than that, I believe. Where does the stock go from here?
Afternoon, Nigel. I think the stock will remain under pressure because the numbers were far worse than what even we had expected. So I think a lot of analysts on the street had pegged in either similar numbers to come through as guided in Q3, and the management had guided to a weak Q4. I think it's much worse than what a lot of analysts on the street were expecting, both in terms of how the absolute numbers on the gross NPAs have panned out, increase in provisioning to a large extent. One really need to understand whether they've created any buffer provisions in this figure of provisioning that they've actually given through. But no, I think the asset quality stress is continuing. I think the stress in terms of how the advances are growing, the AQR stress is still very, very evident. One also needs to understand what has come through in terms of 525 and the SDRs as well, what happens with the SMA2 book, and that will definitely have a bearing in terms of keeping credit costs elevated. So I think all this needs to be understood, but clearly I think the stock has probably delivered much worse figures than what we were expecting, and I expect the stock to remain under pressure.
Yes, but Mayuresh, interestingly, the stock has almost lost around 40% of its market cap on a year-to-date basis, and it's sub 1 times in terms of a price to book value as well. Your sense in terms of how much of the bad news is already factored in, because the street seems completely sanguine about the numbers, that too in what is a sluggish market.
So again, I think one really needs to understand what the management commentary is going to be all about, whether they are saying that they've cleaned up the books to a large extent. But again, I think the restructured pipeline, specifically the standard restructured pipeline, is still very high. And you look at the bifurcation within that pipeline, iron and steel at 70-odd%, you're going in at SED exposure of almost around 23-odd%. You've got power within that, you've got infrastructure also accounting for a large chunk. So unless there is a cyclical recovery that we probably see in these end-user industries, specifically infrastructure, SED, iron and steel, you're not going to see a huge improvement in terms of the next 2 quarters of asset quality improving drastically. Secondly, I think as you're rightly pointing out, I think the interest reversals have played their part as well in terms of how NI has panned out, along with asset quality pressures remaining high, along with credit. My own take is that the CET1, which is extremely poor for PNB at this point of time, will keep the return ratios in check. So I think all these factors would ensure that the stock probably will still have a few softer quarters going ahead, And though valuations are extremely attractive at this point of time, my own sense is that management clarity on what we are looking at in terms of a roadmap, specifically from FY17, which we expect to be extremely tepid for a lot of these bankers in terms of asset quality issues still plaguing, probably stabilize around the second half. But I think these numbers probably are indicating the fact that I think the worst is probably not over for PNB.
Yes, absolutely. Well, we have a notes to accounts which says in compliance of the RBI letter, they provided of a sum of around 166.4 crores, which is around 7.5% of the existing outstanding of 2,218 crores that they have under the food credit availed by the state government of Punjab. And as per the RBI, 7.5% is going to be provided this quarter and 7.5% is going to be provided next quarter. But totally, it's around only 166 odd crores, and compare it to the provisions of around 10,000 crores plus which they've managed this quarter. To give you a sense, as of last quarter, PNB's 17.1% of their restructured book was towards iron and steel. Their 9-month slippages were at over 18,000 crores. For Q3, their slippages were at around 13,000 crores plus. So we are expecting maybe that amount to continue in terms of elevation, simply because only 50% of the AQR was taken last quarter and 50% is expected to be possibly taken in this quarter, and you can see that on your screen that it probably has been at this point. Pankaj, what would you do for a stock such as PNB? The fact that it's completely sanguine post the reaction to its numbers, we're still waiting for the management commentary and what they have to say. But in terms of the stock reaction to its Q4 numbers, the fact that the stock is down 40% year to date, the fact that it's already trading at sub 1 times price to book, what would you assume could be further downside for the stock?
See, I think this is, as you rightly, it's really surprising why the stock has not reacted. Maybe an indication that people are more or less viewing the results, and it means that the holders are not going to be too concerned for next couple of quarters about what happens. But if you look at the entire PSU banking space, I would rather be owning something like SBI if I had to take an exposure to PSU space. Because in this kind of situation, people could give up after a point. So let's say somebody who thinks that these couple of quarters are fine and I'm ready to take that hit. But at some point in time, you have to decide that whether you want to cut your losses and move on, or whether you want to continue to hold. So I think these kind of situations are very difficult to take a call on, and I would probably stay away because of that. So stock might not have reacted to bad results, but this is definitely not an indication that it will not have any further downside from here.
Okay, well, we'll be waiting for details from the bank itself in terms of watch lists, and that would be the most important factor to watch out for. How much slipped from the restructured book, what the watch list is, and to give you a sense, ICICI Bank's watch list was over 40,000 odd crores, Axis Bank was at around 22,000 crores plus, and we had Bank of Baroda, which was at a total of 26,000 crores is what the street took it as, including the SMA2 account. So those are a couple of factors that we'll be watching out for Punjab National Bank, but overall disastrously difficult set of numbers which have come through for the bank this time.
We've seen so many bad earnings from PSU banks. For instance, Bank of Baroda, Allahabad Bank, Central Bank, UCO, Dena Bank, all these banks had posted losses in this quarter. But, I think this loss of 5,367 crore is much bigger than what we've seen in the case of other banks as well. But Mayuresh, just one question. Provisions of 10,000 crore plus this quarter, and still the PCR is only at 51%. Wouldn't that worry you about the provisions that the bank will have to make in the coming quarters?
So absolutely, I think that is the whole point, right? I think the management committee, as Ekta was mentioning, as I mentioned earlier as well, will all guide to on how much stressed assets are they looking in the system going ahead as well. Now, with that into account, and if you assume that the elevated PCR remains at this level of increases going forward, you're going to have some additional stress in terms of provisioning going through. And though I think asset quality pressures might continue over the next couple of quarters, the increasing provisioning, the increase in credit costs is going to keep the return ratios subdued. So largely, I think the bank, in terms of a stock price, has factored in those numbers, but the numbers were a little bit more worse than what we are really expecting at this point of time. So it all tantamounts to what the management has to say in terms of their outlook, whether the cleaning up has happened completely, what kind of PCR coverage they're looking at going ahead, what happens to their CET1 as well, because CET1 is languishing around 8.2%, and they need capital to probably have balance sheet expansion, specifically in the phase where the credit growth is extremely poor and expected to do so and remain so over the next 2 quarters. So I think these factors factors are extremely crucial and critical in terms of their performance going forward and their own balance sheet expansion, which will eventually lead to improvement in ROAs and ROEs. So I think all these factors will take account in what the management has to say over the next 4 quarters, to say the least, because the next couple of quarters at least, in my opinion, would remain soft considering what numbers they've delivered today.
Yes, absolutely. Well, Mayuresh as well as Pankaj, thanks very much for joining in and taking us through what has been a complete disappointment from Punjab National Bank, where, just to recap the numbers, a net loss of a whopping 5,367 crores is what they've recorded, despite a tax write-back of 1,890 odd crores. To give you a sense that last time they had a tax write-back which resulted in a profit figure of around 50 odd crores for them, and this time round, despite a tax write-back, the losses have come in at over 5,360 crores, and that is primarily because of what's taking place in terms of the asset quality picture. Provisions have stood at over 10,000 crores for the bank this time round, and despite that, the PCR, or the provision coverage ratio, has been low at around 51 versus 53% on a Q-on-Q basis. The biggest disappointment obviously is from the asset quality, which has just worsened over the quarters for Punjab National Bank. Gross NPA on an absolute basis up 62.6% compared to a 38% absolute percentage rise that they did in the previous quarter, same time that they had to undertake an asset quality review, and this quarter as well an asset quality review would be applicable to them, and a net NPA which is up 54% to 35,423 crores. NII down 27%, obviously because of the interest reversals which have taken place this quarter because of the asset quality, but nonetheless extremely disappointing set of numbers which is coming for Punjab National Bank. But really, we will have to wait by and hear out what the management has to say, considering that the street will be awaiting many more details such as the watch list, how much is possibly factored in terms of the worst of asset quality, and what their guidance is going forward, considering that they have taken a large extent of provisions and asset quality write-downs this time.
And despite all of it, the stock is not reacting adversely. It's still, holding flat. Yes, it's come off from the day's high. It was up nearly about 2%, but it's flat right now for PNB. But thanks, Ekta, for running us through that. On that note, we'll slip into a very short break, but more in the markets when we return. Just a quick check on the European markets. They have opened up in the red. So currently, the frontline European indices have a cut of close to about 0.5%. So the global weakness extends itself to the European markets.
All right, Rima, before we slip into a short break, just pull up the intraday chart of Maruti Suzuki. I think that stock has cut its losses in the last few minutes. It's recovered from the low point of the day. So just keep your eye out on the intraday chart of Maruti Suzuki. That one, in fact, is recovering. We're telling you that, in fact, there was a presser that was scheduled in Japan itself. That was by Maruti. So we'll try to get in some sound bites from there as well. We slip into a short break, come back, we'll focus on the markets. We'll also try to get you a conversation that we had with Jayant Sinha. Stay tuned.